Let's check out shares in Canaccord Genuity, that company moving closer to a settlement with U.S. regulators. Shares down a bit today. We're joined by Dan Daviau, the chairman and CEO. Thanks very much, Dan. Just remind us then, so most of your business these days is wealth management in Britain, in Canada, and Australia. Just handling money for wealthy individuals and institutions?
Yeah, exactly right, Andy. And you nailed it. That's where we've been growing for the last 7 years in our business. It's our wealth management business. We hit record assets of $135 billion this quarter. The UK is our biggest wealth business, but we've got a huge wealth business in Canada as well, 50 billion. And then in Australia, a burgeoning wealth business. We just did another acquisition there, so we'll be at $17 billion in assets there. And that's managing your viewers' money, lots of households and wealthy individuals' money and their market investments. So it's been a pretty exciting part of our business.
What's your total asset base now, roughly?
Yeah, 135 billion, which is a record, and quite frankly, that's the seventh consecutive record quarter we've had. Every quarter, it kind of grows and grows and grows.
I know there's a spectrum, but what would the management fee on that asset base be? You
can do it backwards. On 135 billion of assets, we do about $1 billion in revenue, so that's just a little bit less than 1% overall.
And then you do financings, IPOs, and stock issues. That's about a third of your business these days?
Yeah, from a profitability perspective, it's about a third. Okay. From a revenue perspective, maybe just a little under half. And again, that's taking entrepreneurial companies public and raising the money and helping them buy and sell each other and trading their stock like any other investment bank would do. We tend to focus, we're huge in the mining sector. That shouldn't come as a surprise given dominance in Australia and Canada. But we're big in technology and healthcare and sustainability and consumer and several other sectors.
Now, your partner in Britain could trigger a sales process. Can you update us on that?
Yeah, that's a little too nuanced. We own almost 70% of our UK wealth business. We brought in a financial partner to help us grow that business 4 or 5 years ago. At the end of 5 years, we start having to figure out how we're going to take them out of that business or pay them. We're talking to a lot of people about how to do that, whether we refinance them or look at other options. So yeah, it's a very valuable business we own there. We did 22 million pounds of EBITDA in that business this last quarter. So it's a very valuable business, and we'll continue to assess options. There's no gun to our head. We are incredibly excited by that business. It continues to hit or exceed its targets in terms of what it set for itself. So it's a very good business to own. It's a very good business to invest in. But yes, we do have a financial partner in that business that we're going to have to deal with at some point.
So just on this regulatory snag you've brought the total provision here to just over $100 million. What are the regulators beefing about there?
Yeah, it's primarily a compliance oversight issue of some non-core trading operations we had in the U.S. And this has been brewing for 3 years. For 3 years, we've been trying to get this thing behind us and settled. And finally, we're in a place where we actually have a pretty good sense as to what the fine would be, which is why we increased our provision. We'd like it behind us. It doesn't implicate any of our current businesses, any of our current employees, any of our customers. And it really is a compliance oversight issue. I don't want to oversimplify it by saying, didn't file the right things that we should have filed when we wanted to file it, but we've done a complete transformation of our compliance infrastructure there. We've taken it incredibly seriously. We've spent an inordinate amount of money over the last 3 years rectifying and remediating what we needed to remediate. So we feel pretty good about where we stand today. But the U.S. government's been shut down for the last 43 days, just reopened. We've got people on the other side we can talk to and get this finalized over the next several months.
Just want to get, you've been around the markets for a while. Do you get a feeling of undue speculation and froth? I'm talking about these triple leveraged ETFs, for example, and crypto proliferating. Do you think, there's always going to be human beings who want to take a flyer on things, but do you think there is a gambling element creeping into the markets?
I think there's always been that, to be honest, Andy. It depends on what element. Sometimes they bet the other way, depending on the market. But I'll tell you, broadly speaking, I mean, we have seen, from a market perspective, you've seen 80% of the central banks cut rates this year. You've seen Canada and the U.S. cut rates in October. You've seen the Russell 2000 up almost 20%. That's the smaller cap index. So we haven't seen that broad, market participation in a long time. IPOs are picking up. Private equity firms are doubling the number of IPOs they're doing, taking companies public through IPOs. So, there is speculation, I'm sure, in some of the triple beta leverage funds that you're talking about. But broadly speaking, there's some real fundamentals driving the market as well, and we're seeing the benefit of that in our underwriting business.
Dan, thank you very much indeed for joining us.